So we can see this company, Net Solutions, who's been our example all the way through these first 3 chapters. They earned $16,840 in fees. They also earned $120 in rent revenue, so their total revenue was $16,960. Then they had wages, supplies, rent, utilities, insurance, depreciation, and miscellaneous expenses. So they had total expenses of $9,855. So their net income was $7,105 for this period. So here's my question for you. What is this period? Is it a year? Is it a month? What is it? Yeah, so they're a little weird, right? Their income statement is for the 2 months ended December 31st of the weird year thing they do, right? So you have to sometimes look up at the top and make sure you understand what period of time we're talking about. Was it a month? Was it a quarter? Was it a 2-month period? Because it could be really, you could really make some wrong interpretations if you think this is just a month, but it was 2 months, or if you think it was a whole year, but it was just 2 months, right? So you have to be careful. If you haven't noticed yet, accounting is a game of attention to detail, recognizing little small details of things, and that can be challenging at times. Let's see, clicker, why aren't you working? All right, so the second one, the statement of stockholders' equity. Remember, this company, Net Solutions, was a brand new company. So in the beginning, they had no common stock, no retained earnings, no nothing. Then the owner issued common stock, which means the owner put money into the business, and the business issued stock to the owner in return to show that investment. The common stock increased. Then their net income, which again, revenue minus expenses, added to the retained earnings. Then the dividends, money paid back out to the owners, subtracted from retained earnings. And in the end, the business now has a stockholders' equity of $25,000 from common stock, $3,105 from retained earnings, or a total of $28,105. The second major statement, right? And the third is the balance sheet. Recognize that this number, net income, doesn't come off your trial balance. It comes off of your income statement, which you created first. There's a reason you have to create it first, okay? Because you need the net income to figure out the retained earnings. And then the common stock and retained earnings you need for the balance sheet. So they flow from one to the next, okay? So here's something new that we haven't really talked about. It's pretty normal for balance sheets to separate out our assets into 2 categories of assets. The first called current assets, the second called property, plant, and equipment. Sometimes you'll see them called something like long-term assets or something like that, but it's the same idea, okay? So current assets are assets that are cash or readily convertible to cash, or things that we expect to consume or use up within the next year. Okay, that's that 1-year rule, okay? So it's going to include cash, accounts receivable, right? That, when we say use up, what we really mean there is collect it and convert it to cash, right? Supplies, those are things we expect to use up. And then prepaid insurance, another asset we expect to use up. By how? By having insurance, right? So that's our total current assets. And then we have our property, plant, equipment, which includes land, equipment, and that's it for these guys, okay? Every property, plant, and equipment account, with the exception of land, will have a joined contra account called accumulated depreciation for that account, okay? So that's just how we keep track of how much of this we have recorded as an expense over time. Okay. So the total of current assets and the total of property, plant, and equipment will be the total assets. Liabilities are also broken into 2 categories. Current liabilities, those are debts that we expect to pay off within the next year, and long-term liabilities, liabilities that will take longer than a year to pay off. This business, as of right now, only has current liabilities, and not very many of them, right? And then finally, our common stock. Again, that's the money the owners paid into the business. retained earnings, the money that the business has earned through net income and hasn't paid out in the form of dividends. So total of our stockholders' equity and our total liabilities would be the bottom line on our balance sheet, $29,495, and it should match the total assets. Why? Because in the very first day we learned assets equal liabilities plus stockholders' equity. Always. Okay? Always, like Snape, right? Okay. Moment of silence. Severus Snape.